what's up, YouTube investors? This is Steve from the Stock Market Shark YouTube channel. Guys, Netflix is not about Netflix and chill these days if we are talking about the stock price of the company. So today I'm coming with some coverage of the stock because what is going on the market is just brutal. Are you guys a Netflix investor? I am, and I feel the pain with you. And I'm also looking for the background story. I'm also looking for the answers. Just look at the screen, guys. Look at the screen. It's a horrible crash. What is going on? I even see in the headlines today that Netflix is bringing down the entire Nasdaq. I think that these articles, so basically everything has been about Netflix today, and I really think that a great part of these articles are clickbait. And eventually, we cannot say that Netflix is bringing down the Nasdaq because Netflix is only 1.6% of the index, of the Nasdaq index. So this is just the clickbait, but definitely, I think it set the tone for the tech stocks today, in a sense. So let's take a look at it, guys, and let's see what's going on and what we can expect for the future. Yeah, before we start, the usual ask: please smash the subscribe button in order to receive coverages like that in the future. But your time is sweet and precious to me, so let's kickstart our discussion on Netflix. So just very quickly looking at the chart, what's going on with Netflix in the last couple of months. So as you can see, guys, in the last year, Netflix was heavily underperforming the entire market. The blue line, you can see the S&P 500. The S&P 500 has been producing a yield of 20%, a profitability of 20% in the last year. And on the other hand, Netflix has been producing a little bit above 10% losses. This is the orange line. So you can see basically the gap between the market's performance, the S&P 500's performance, and Netflix performance. So Netflix has been under pressure recently, and this pressure has been even more severe if you take into account the performance of the last day. So let's see what's going on in more details. So if you take a look at the chart of the company, we can see that the company has been moving in a negative downtrend since end of November, December last year. And eventually we've been just breaking down the lower support line of this trend channel. So basically the whole picture looks entirely bearish. We are below the 200 moving average, the 100 moving average, and the 50-day moving average. And basically the stock has been registering one of its highest historical losses in one single day. So we are talking about a stock with a market capitalization of 122 billion currently, and the stock has lost almost 1/4 of its market cap within one day. The question is this realistic, and should we do some bottom fishing at these levels? So in order to answer this question, let's look at the earnings report, and let's try to figure out if this has been eventually so severe as the market reacted to it. So just the headlines from the earnings report. So let's take a look at the top line, the revenue. The top line, in terms of the top line, the company's earnings reports was a match. As you can see, guys, the reported value was a revenue of $7.7 billion, and the analyst prediction was exactly the same value. So there's a match here. So that's a tick, right? Let's go further and let's take a look at the earnings per share. The earnings per share was a beat. Basically, the reported value was $1.33, and the analyst prediction, the street expected a value of $0.82 So in this regards, we've beaten the street's expectations. There's only been one miss, and the market has been reacting pretty heavily to this one, and this was the number of the global paid streaming memberships. In this regards, the analysts expected a 222.1 million new streaming memberships, and the actual value was a little bit beyond that, a little bit below that. It was 221.8 million. So as you can see, there's only a minor difference here, but still the market has been panicking and has reacted in such a severe way. So guys, the overall picture, and if we extract just the highlights from the company's earnings report, it doesn't look so bad overall. I think what the major problem is with this report, and I'm going to show you what's going on. So you can see here, this is the earning reports of the company, and you can see here the revenue numbers from the previous quarters and the year-on-year revenue growth percentages. Going back to the fourth quarter of 2020, we are basically climbing from 21% revenue growth to 24%, and from that value, so we topped out there, and from that value we are basically decreasing to 19% to 16%, and 16% was the value of the latest quarter as well. And the prediction, and this is I think the most worrisome thing, the prediction for the next quarter is only 10% revenue growth. And if we take a look at Netflix's historical revenue growth in the last 5 years, for instance, so Netflix has been growing with a growth rate of almost 30% in average in the last 5 years. You can see this massive number here. You can see this massive number here. I switch back to the earning reports just to highlight once again the gap. We are talking about a revenue growth of 16% only, so half of the historical average growth rate, and basically the next quarter's growth rate is 1/3 of the historical average growth rate. So we are talking about a significant deceleration of the company's revenue growth. And that is I think that is concerning mainly the investors. So we can also highlight the decrease in the operating margins. So as you can see, the maximum of the operating margins was 27% in the first quarter of 2021, and from there we are decreasing the margins as well. We have decreased them back to 8.2%. So basically the profitability of the company, basically the margin says how many percent of the operating of the revenue is operating profit after the operating incomes. And this is basically like an important metric of the profitability of the company, and it has been significantly decreasing. So we have on the one hand decelerating growth rates, and we have basically on the other hand some decreasing margins as well. So profitability and growth rate are more and more negative. But I have to highlight one thing, guys. So we are talking about only one quarter. So for those of you guys who are not trading Netflix and who are invested in the long term, one quarter's performance should not be indicative. This quarter, of course, highlights some trends. The trends that are highlighted here are that the competition is getting stronger and stronger, and basically the other streaming companies who are competing with Netflix are eating up Netflix's lunch. They are eating up Netflix's steak, it seems. So they are growing probably at a faster rate, and they are pressuring the profitability of the company. They are pressuring the margins, and that of course can represent basically a danger or a warning in terms of the future prospect of the company. But we are still talking about 1 quarter of performance of the company, so we shouldn't draw like very solid conclusions from here. We shouldn't panic based on the performance of 1 quarter. And I want to show you one thing, guys. So there has been a seasonality in the performance of Netflix that can be recognized. So eventually the last quarter of each year has been historically weaker than the rest of the quarters. So I want to show it to you guys. For instance, revenue chart. If we switch the quarterly view, then we can see that the revenues are historically lower in the last quarter of each year than in the rest of the quarters. And I want to show you the net income as well. So if we take a look at the net income, you can see here it's always like in 2020, the last quarters was weaker as well. In 2019, 2019 was an exception, but you can see a seasonality. So the middle quarters of the year are usually stronger. So I think it's not reasonable to like draw some very severe conclusions from the performance shown in one single quarter. So that's where we are, guys, at the moment with Netflix. And yeah, I want to show you one other thing. We are talking about the financials right now. Basically, let's look at the growth numbers, and let's take a look at the valuation metrics as well to see if Netflix is historically cheap or historically expensive. So we can use two metrics here. We can use the price to earnings multiple. Basically, that is showing how much the investors are paying for 1 unit of earnings of the company, and we can take a look at the price to sales ratio that is showing how much money, how many dollars the investors are paying for 1 unit of sales of the company. As you can see, the price to earnings for the last 12 months is 45. The sector median is around 20. So we are talking about almost double the sector median. Is this something excessive? We can answer this question. We can answer this question just by looking at the historical values for Netflix. And as you can see, historically, Netflix is cheap at the moment. So basically, Netflix is showing the lowest historical price to earnings ratios. So we'll be much higher than that eventually. So you can see the chart here. So the price to earnings is decreasing. So Netflix is historically getting cheaper and cheaper. And the same picture shapes out if you take a look at the price to sales ratio as well. Let's take a look at it. Price to sales ratio. So currently it's 7.58, and the historical values show that, yeah, also on the price to sales basis, Netflix is cheap at the moment. So that's where we are. So we can say that Netflix is historically cheap at the moment based on the price to sales, price to earnings multiples. And we should also take a look at the competitors, the peers. Let's say, for instance, how Roku is valued at the moment. What kind of price to earnings ratio does it have? What kind of price to sales ratio does it have? The price to earnings ratio for Roku is 80, so way higher than Netflix's similar ratio. And the price to sales ratio for Roku is also 8.6. So also based on the peer comparison, we cannot say that Netflix is expensive at the moment. After the recent decreases, I think that Netflix is getting more and more reasonably priced. So it might be worth considering slowly starting to buy into the stock. So that's where we are at the moment, guys. That's where we are at the moment. And I want to highlight one more thing before we draw the conclusion. So if we are talking about Netflix, a company that has a market capitalization of 122 billion, it has a massive growth rate that has been decelerating in the last couple of quarters, but still the company is growing at quite impressive 16% growth rate in the last quarter, and longer term growth is expected to be even higher. The historical growth rate of the company is around 30%, and the company has just turned cash flow positive. As you can see here, the free cash flow for the last 12 months is 151 million US dollars. So it's cash flow positive already. So, and also if you take a look at the highlights, overall, the quarterly report, it wasn't that bad as the market reacts to it. So this can create a market opportunity. And guys, Netflix is still the biggest streaming company in the entire world. So the data that you can see on the screen is Q4 2020, but Netflix subscription were above 200 million in the entire world, and Amazon Prime, that is basically the second player in the industry, is still way below that at 150 million subscribers. And you can see also the other market participants. So the picture says that there are a lot of competitors in the market, and yeah, the competition is going to be super severe, and we are not sure how large the stake that basically Netflix is going to own in the future would be. But definitely the position in which Netflix is at the moment, he is the largest player. He has the strongest background. He is basically the player who's winning the most awards in content creation. So basically, taking all this into account, we can say that Netflix is in quite a favorable position. And after the investor pricing in this disappointment following the latest growth rates and the latest subscription growth rates, I think that Netflix is getting an attractive opportunity. So yes, just one more thing. If we take a look at the percentage growth, we should also highlight that yes, on the one hand, investors are right that some market competitors, market participants are growing at a way higher rate than Netflix. For instance, just take a look at Disney Plus, Hotstar's growth rate that is 500% in 2019. So that's eventually right, but still there's a long way to reach Netflix's size, Netflix's market basically strength, and this is important. I think that the position in this industry means a lot. So my conclusion after looking into Netflix's valuation and Netflix's earnings reports is that, to summarize the bottom line, Netflix is basically performing in a very negative macro environment, just like the other growth stocks. So if anything negative happens to the stock, like for instance, there's a disappointment in the earnings reports, the reaction of the market should be multiplied, because basically the sentiment it can become much more negative if we multiply it with this negative macro background. So that's why we see such a massive negative performance today. But on the other hand, overall, I think that the report doesn't look so bad. So in terms of the main lines, it was a beat or a match, and in terms of the subscriptions, it was like a slight miss. What's important for investors, and I can empathize to it, is that the next quarter's basically projections are not so promising. But don't forget, guys, don't be short-sighted. We are talking about holding a stock for multiple years, 5 to 10 years, to produce massive profits. And in this regards, one quarter of bad performance or weak performance doesn't count so much if the company is able to just adjust its performance, its growth rates on the longer term. So, and I really believe that Netflix, taking into account its market position, is going to be able to do so. So keeping the story short, guys, I think that what I'm going to do, and I think that this is just my opinion, so not financial advice. Take your own research and take your own decision, but I would slowly start buying Netflix at these rates. Probably this stock is going to sink lower, but by dollar cost averaging, I think that someone who just starts buying right now at these levels would be able to build up a quite good position, and that can basically bring some very good profits on the longer term. So guys, thank you very much for watching my videos. Please tell me if you own Netflix, and please tell me what do you think about it. Are you planning to sell it, or are you going to buy some additional amount, some additional shares of it? I'm really curious about your opinion. So thank you very much for following this video, and please don't forget to subscribe. I'm coming with some interesting stock coverage in the upcoming days as well. Take care. Have a profitable trading. Cheers. Bye.